Hello everyone, I hope you're all doing well. In today's video, I'm going to talk about commission income and expenses. So if you earn commission income, what expenses are you able to deduct against that commission income and pay less tax? Let's get into it. How to save tax in South Africa, commission and expenses. So what is commission income and who qualifies? Commission income refers to the fees you will earn from making a sale or closing a deal. Usually it's a percentage of the sale proceeds, but it can also be a flat rate depending on a commission agreement. When you are working for an employer and you're employed, but your income is primarily made up of commission income, and then on your IP5 you see the code 3606, and that commission income is more than 50% of your total remuneration, you may be able to deduct expenses against your commission income. So, what types of commission income are there? There's a real estate property, so you can earn a commission on the sale of properties, also on the sales of online courses, or when you work in an art gallery and you sell some of the artist's art, you can earn commission income. Also from affiliate programs when you're selling products and services of customers, and also the sale of investment products. For example, a financial product like a unit trust or other investment types. So if you earn commission income and your commission income is 50% of your total income, what expenses can you then deduct? SARS will allow commission earners to deduct all of their commission related expenses against their commission income. So what does this mean? This means that any expenses that you incur to make that commission income, you can try and claim that as a deduction for tax. These expenses may include a telephone, so you use your phone to call your clients and to close deals. You have to have a bank account where you receive funds and you pay money from. Your travel costs when you travel to clients, or you may use an Uber. Your stationery, which includes pens, paper, and printing. Any employee costs when you maybe have an administrative assistant or a personal assistant, or you have a sales team. Any wear and tear on your business assets, for example, if you use a laptop, that laptop you can claim wear and tear over a year or 3 years. Also, when you entertain clients or you're on the road and you have to buy food or drink, you're able to claim that entertainment. And also home office expenses if you work from a dedicated home office and that home office is set up for work purposes. Now, if you want to claim those commission expenses, what supporting documents are you required to retain as proof of those expenses? So if you want to claim telephone expenses, you have to have the monthly invoices or a statement, and you also have to do a calculation to show how the total expense was apportioned for business and personal use. Bank charges on your bank statement, you can just supply a bank statement. A tip that I can give you is that you open a separate business account, which is apart from your personal account. That will just help to split your business expenses from your personal expenses. For travel costs, you have to keep a logbook with the details of your business mileage. On the logbook, I can recommend that you have your opening odometer reading, your closing odometer reading, your business kilometers, from where you are traveling to where you are traveling, what is the reason for your travel, and which client you are going to see. Also, SARS would like to see your vehicle purchase invoice, and if you paid fuel, maintenance, license, and insurance, please keep those invoices as well. If you travel by Uber, say you live in a city and it's easier to travel by Uber than using your personal car, please retain your Uber receipts. Uber is nice enough to send those to you on email. For stationery, you can keep your purchase invoices or your slippies. So say you have to go and buy some pens, you use pens or you use paper for printing, please keep those invoices. For employee costs, say you have an administrative assistant or a sales team, you'll need an employee contract and the pay slips for those employees. For depreciation, so this is the wear and tear on your laptop, you will need the proof of purchase of your laptop, and then you also need a calculation to show how the wear and tear was calculated. So wear and tear refers to the useful life of a laptop, say 1 year or 3 years. And then SARS will also like to see how you apportion that expense between business and private use. So say you're using a laptop, sometimes you'll use it for private use at night. SARS will want to see how much private use you are doing and how much business use. Say you use it 70% for business, 30% for private, then you're only able to claim 70% of the actual expense because that's the amount of time or that's how you use it for business. For entertainment, when you go to restaurants or you entertain clients, you have to keep a list of the people you are entertaining and what the purpose of that meeting was. It is very important that you retain all the supporting documents for a period of at least 5 years because SARS can audit any expenses you claimed up to 5 years. So they do require that you keep those supporting documents. Now, how do you go about to claim the commission expenses on your tax return? So when you open up your tax return and you see the form wizard is the questions you fill in at the beginning of the form. And based on what you fill in here, the rest of the form will populate. So when you open up your ITR or your South African individual income tax return, you will see the form wizard. On the form wizard, under the standard questions, you want to go and answer all the standard questions as applicable, and specifically the last one that asked, did you receive any income excluding amounts received as a beneficiary or deemed to have accrued in terms of Section 7 and or any other allowable expenses not addressed above? This question, marked in the red block, you want to complete as yes. If you complete this question as yes, then you will see that in the form wizard, under your standard questions, a new blue block will appear that has comprehensive questions. So this is the block you want to see. Under comprehensive questions now, there will be more questions that you have to answer. So the one you want to be focusing on is the one that says local business, trade and professional income with the number of separate trade activities carried on. In my example, I said yes, and I said that I carry on 3 different separate trade activities as an example. Now that you have completed your form wizard, your standard questions, and your comprehensive questions, and you've selected that you are in a trade for local business, trade, and professional income, your return has now been set up and you can continue to the next step. When you go to your questions, you firstly want to check your employee tax certificate information. So this is your IRP5 or your IT3A. So the IRP5 is the summary of your remuneration for your employment period, usually 12 months. On your IRP5, you want to focus on the following. Firstly, you want to check that your remuneration is reflecting next to the correct code for commission income. That code is 3606 and the amount that was included there by your HR department. The second thing you want to check is that your commission income is at least 50% of your gross employment income, which is listed next to code 3699. In my example, the commission income is 100% and fine. So it's very important in this step that the amount that is next to 3606 must be at least 50% of your total gross employment income taxable. If it's not at least 50%, you will unfortunately not be able to claim expenses against your commission income. So this is very important to check if you want to claim commission expenses. Next, you want to go to your taxpayer information income on your form wizard and your form questions. So in the red block listed on the screen, you'll see your taxpayer information income. If you click on that block, you want to go to your local business, trade, and professional income. And here you want to go and complete in the block that says income reflected on IRP5 regarded to be trading income, the same amount as you just confirmed on your IRP5 in the previous slides in this return. So on my IRP5, I confirmed that my commission income amount was 461,079. I then want to include that amount from my IRP5 in this section of my tax return. So what that does is it says that I receive money on my IRP5, but that money is regarded as trading income. So deduct it from my IRP5 and bring it in here because I regard it as trading income. The reason we do this is so that we can deduct expenses against this income. If you have completed the income, then you can go ahead to the expenditure. So now you can complete the expenditure section and complete the relevant expenses you want to claim. Please note that if you complete your return this way, you will be regarded as carrying on a trade or other income, and you will be accountable for provisional tax in August and February for each year of assessment. I have, however, found that this is easier than adding it together with your commission expenses and claiming them against other deductions code 4016, as this requires more explaining during a review or an audit. Is there anything else that you should know as a commission income earner? Yes. So as a commission income earner, you are able to apply for a fixed percentage tax directive with SARS. What this means is that your monthly pay-as-you-earn calculation takes into account the commission expenses that you want to claim in the year of assessment, and you pay less pay-as-you-earn on a monthly basis. So if your fixed percentage tax directive works out to, for example, to 33%, and you are normally in the 41% tax bracket based on your income, then your pay-as-you-earn throughout the year will be calculated monthly as only 33% of your remuneration instead of the 41%. What is then very important is that you have to keep good record of the expenses you want to claim. If you have too little expenses at the year end, you would have paid too little pay as you earn through the year, and you will have to pay in a lump sum for the second provisional tax. So what this says, this tax directive, is you go to SARS, you tell SARS throughout the year, I'm going to incur some commission expenses against my commission income. Please give me the benefit of those expenses throughout the year and not only at year end. So this tax directive is completed based on estimates. It is then very important that you keep good record and that you actually incur those expenses which you estimated, so that in the year you don't pay too little pay as you earn. If you want any more information on this, you're welcome to go to this link that I shared at the bottom of this slide. If you want more information and you want to request a slideshow, or you want to request a template copy for commission income and expenses, you're welcome to send me an email to my email address at anrich.mare@gmail.com. And I want to thank you for taking the time to watch this presentation. I trust you found the presentation useful, and if so, please subscribe to my YouTube channel and share this video to your friends and colleagues. I thank you for taking the time to watch this video. This is Anrich Mare. Goodbye.